So this is kind of what we were looking at Monday. During that live stream, we were looking at, we were looking at this rising channel here, with the upper bound being up here. And since we broke this diagonal resistance on Monday, we were looking at that retest right there. And, we were looking at that to hold and to gravitate towards this supply right here, which is what we've done so far. We hit it once, rejected, and then came back up and wicked through it, and then had a nice rejection. So there's no, there's a little screwy price action going on right there with it rejecting so hard, but it's not really a surprise when it hit this area right here where you can see there was a pretty good supply back there that we couldn't just break it on the first go. So that's kind of why I was looking at that being a target if we entered right here on Monday when we retested that diagonal break. That's why I was looking at that really being the target and not getting too greedy going higher, because I figured there would be some kind of reaction right there. And so far, it's just reacted back down to the diagonal breakout again. And then we're coming back through. And so now that we've reacted twice and we're attacking it for the third time, then I'm more inclined for us to break it, maybe get some kind of quick pullback on a lower time frame, and then we can go for this next resistance up here, which is really, I should probably, whoops, what did I just do? Zoom back in on that, which we should really probably do this. Give us a little bit more of a conservative range right there at the top. And so I would look for us to kind of gravitate towards that. If we once we break through, flip that as support and start gravitating up to here. And so that might not look exactly like that, but it might look something like that. And so if we do go up there and then get our pullback, I'm still going to be looking for, some kind of pullback, potentially to the like the 0.5 of wherever this tops out at, which would be right in here if we top out near the highs. And that's not to say that it has to top out. I mean, it could keep going, but what I really want to see is this channel to break down that we're in. We're still channeling. This is a false breakdown of the channel because we just immediately reverse back up with these long wicks and we're back in it. So I'm still going to keep this channel line on here using this second point because that's just kind of a false breakdown to me. And then I can tighten this up a bit. So we could just come up and squeeze up into the upper part of this channel again, and then we roll over and we get our more substantial breakdown of this whole move right here. And so, the market moves and, goes into an impulsive wave, and we have to get in a corrective wave off of that. And so that's what I'm going to be looking for. And then we'll go up for another wave, and we can project higher off of that. Once we have a more substantial correction wherever that tops out and wherever it bottoms, we can kind of project where we want our next target to be if we're going to be getting in longs. But right now, you can't really get into any longs with higher targets based on the structure that we're in right now, because it just looks like once this resolves, we're going to get a bigger pullback that we would go long for. It doesn't mean it has to happen, but you know, uh, probabilistically speaking, it would. This could just go through like this, and then we just really rip out of here. And if that's the case, then we don't get the pullback. But I would still be looking for some kind of pullback because we're at the supply right now where that was resistance, and then we'll have a little resistance here. And so at minimum, I would be looking for, like, even if it moved up to here, I'd be looking for some kind of pullback to here as support, as just a, like, very shallow retrace. But right now I'm kind of leaning towards bullish because we're attacking it just looks super bullish after doing the false breakdown here, and then immediately going back in the channel. We're attacking this resistance again for the third time. So I'm going to be looking for it to make its move up to there, or to the upper ends of this channel as well. And so other than that, nothing really has changed. We've retested this diagonal twice. That one would have played out well on Monday. I didn't take that, but looking at it on Monday's video, I was saying this looked like it would have been a decent long. I mean, it would have been like I think 1.5, 2 to 1 risk to reward or something like that if we targeted there. Um, and then the other retest down to here would have been a decent entry as well. Like if you were looking at the most recent pivot low before we had like a more substantial move up, you could pull the fib like that to the absolute high of the wick that we made. And that would give you like a little bit of a range as well as for confluence. So you could have entered on that Darth Maul candle right there where it made a false break above the high into supply, dumped back down into this like fib support range. There's a lot going on right here, a lot going on to be able to enter on. So let me go down to like an hourly. So not only do we go back kind of like to the more obvious pivot low to pivot high, I mean, you could pull it like that, but a lot of times, especially if we're towards the end of a move, it looks like we're towards the end of a move and you're getting divergences in the RSI, which is what we have. You see the lower highs, but higher highs in price. I would not pull the fib this close to that last move. I would go back to a more substantial where the more substantial move came from. I would pull the fib from there because if you do it from there and we have divergences, it's very likely that this retrace is not going to hold at all. It's just going to get completely blown through, especially when you have like a false breakout like this where we push through and we can't hold and you get this nasty candle. It's most likely not going to give you any kind of support at all on this most recent move up. So you're going to have to, because you got all these divergences playing against you, there's going to be a lot of people shorting, and so you want to be looking for a more one of the pivots that gives you more of the move. So you can see how this kind of was like one move, and then this all right here was kind of one move, and so we're getting some kind of retrace off of that. I hope that makes sense. Because sometimes I get caught up, I still get caught up pulling a fib too early. I'm on like the really low time frame, like the 5 minute, and so this looks like a very substantial move, which it is. If you're playing like the first retrace, if you're playing like this move up and that first retrace right there, then you would be good. But after this has already played out a bunch of price action and we made a new high, and we have divergences that are playing against you bearishly, and it was a false breakout into supply, you can suspect that this is going to be a more substantial retrace, and you're going to need to pull the fib to a lower pivot, and so that would give you a little bit more confluence. And not only that, you're kind of pulling the fib from here too because you're trying to find confluence that's around this diagonal. And so if you can look at this pivot down here to that pivot high, and it gives us confluence around this diagonal, we have a little bit more confidence that especially as quickly as this retraced, that we would get some kind of bounce out of here because there's just a lot going on. You got the diagonal support, you got a more substantial pivot low to pivot high 0.5618 right in here, and so that gives you more confidence to layer some bids in right here. And I definitely would have, if I was awake for this, I would have been layering some bids all the way through here, with potentially a stop like below the 707, which below the 707 in this case would probably be fine because you have this support right here. You got the 618. You got this kind of support area back here that we'd broken through, and so the 707 would have been fine in this case, and you could have gotten some bids layered through here and filled, and then immediately, within just a couple hours, or even really on that next candle, it bounced up and you could have got over a 1 to 1 risk to reward. Or if you wanted to hold for a more substantial retrace of that move down. So one way to look at it is you pull a fib. So if you did get an entry right here on this retest, you can pull a fib from that high down to that low, and then use your target as the 0.5 on the way up, which you almost get on this reaction on the very next candle, or target the 618. And if you're bullish and you have a bias that it's going to continue, I probably wouldn't have, just because we did break down right here. We did react bullishly back up into this channel, but sometimes you get that and then it still rolls over. So I would have been a little I would have been a little hesitant to target all the way back up here at this demand. I would have probably done the 0.5618 somewhere in there because that was kind of resistance. I like to trade locally a lot and not look. I like to keep the win rate high and trade the local swings and very short-term resistances, so I can, I know there's a high probability of success, and my win rate will stay higher that way. So I could have targeted that resistance right in there, and that would have been between the point 0.5 and 618 of that top to bottom right there, move back up. So that would have been a good trade. That would have been, one and a half, 2 to 1 trade. If I was ready for that this morning, I would have taken that. And so currently, I'm still just waiting for this to run out of gas and give us a bigger pullback, and I'm wanting to see some kind of structure breakdown because right now this is still just channeling in a structure. We got a little bit of a false breakdown, but it's still just channeling in a structure. I want to see it. I want to see something like that, a breakdown out of this structure. Um, Especially if we got something like that. If we got something like that, you'd be looking to short. If it broke down really hard, you'd be looking to short resistance again. If it broke back below there, and then target maybe, like we had said, pull a fib from there to there, and target the point 0.5 to 618 wherever that is, and plus that would kind of line up with our diagonal support right here, and that would be a good entry and to project for a higher target upper ends of this trend line. So that's just some things to look out for um, if you're going to trade these higher time frames for the bigger swings. If you're just scalping, you just need to be aware that we're in this channel. You can make some decisions based on that. Kind of mark off where your resistances are. So resistance, we've rejected a couple times there. We know this is support. So when we're on the 5 minute time frame and you can't really see back to all this stuff, you need to have it marked out so you know it's there. Like that was support, that was support, resistance, resistance, resistance. We know we got resistance up here. And so when you're scalping on the 5 minute time frame, you don't have to. You have all that context, and so you can kind of build trades around that. Um, because it would have been easier to catch a short on this right here this morning if you were aware of that. You could have caught a short in this price action, and you could have caught a long down here because you knew that fib level range was here. You knew the diagonal support was here, so you could have been averaging in there on the 5 minute time frame. And that's what I'd normally like to do. I like to do all my get all my trend lines, get all my resistances drawn up, and then get on the 5 minutes so I can really snipe my entries. So this was an easy one just because it was supply. We knew it was like pretty obvious supply where it was rejected back there in the past. We rejected right here. We consolidated under it, and we had a nice break above. But as soon as it started to break back down right here, it was kind of a sign to short because we had these divergences on the higher time frames. Like if I go to the 15 minute or even back to the hourly that we were on, you see these divergences right here: higher high in price, lower high in RSI. That tells us that we can have a more substantial pullback. And so if we know that and we're on the 5 minute time frame, as soon as we start to break back down through here and this high is starting to fail, you could have hopped in as soon as it broke back below this high right here. You could have jumped in, or just look at some different time frames. If you see this 15 minute, you need to make sure you're looking at like some higher time frames, 15, 30, maybe even the hourly, which the hourly would have gave you a late signal because it closed way down there. But like a 15 minute, you can see how it closed red, stuttered around this prior high for a second, and then it really ripped through. And so if you're trying to snipe, a lot of times you have to anticipate like what you think might happen, considering this is supply up here. If you got a 15 minute candle close like that, at minimum, what you could do is get in with a stop that might be based on the 5 minute. I'll show you just in a second, but we could conservatively have it right here and then do a one, close to a 1 to 1. Maybe, after a 15 minute candle close, like this is a bearish formation right here. I would expect the next 15 minute candle to at least go down, almost the full length of that body. And in this case, it was even more, and it resulted in more of a correction. So with that candlestick pattern in mind, and I know we're at supply after a string of green candles, I probably would have took an entry right there and had a stop just in case. I'm kind of anticipating the fact that this could reverse out of here because we have the divergences on the hourly that I showed you. So that's a telltale sign right there. We're at supply. We're trying to get in on any sign of a potential start of a pullback, and so this is a very aggressive way to do it because you might not be right all the time. But with this candlestick pattern, I would have been quite confident in jumping in right there, at least targeting maybe a retest of that break of that high right there, and so that would give me close to a 1-to-1 if I did that with the stop above the high. And if I go down to a 5 minute, I could probably even tighten this up even more, since that's what I would be looking at. I would have a 15 minute pulled up next to this because I usually have 4 different time frames pulled up, and I would look at that 15 minute candlestick pattern and I would say, oh, that's looking pretty good. And so if I got in on the 5 minute here and I see this start to roll over, if I see the weakness on the 5 minute continuing, you could try to tighten your stop up a little bit, so it's not so hard to get a 1-to-1. And so that's just a couple ways to play that. Just to keep it safe, I would have kept my stop above here, and then I would have watched this 5 minute time frame to see if there was any strength coming in. You get a small reaction right there, and in that case, you could have tightened your stop up a lot once it's already down to here if you're going to try to play this as a bigger reversal. And once it did break down out of here, you could have even added to the position. It would bring your average entry down if you added on the breakdown right here, but then you could keep your stop loss pretty tight, because if this is going to follow through, it's going to follow through pretty quick. And so you could probably almost put your stop at break even at that point after averaging in more when it breaks down here, and then just have a trailing stop, or just have a target of, you know, when it breaks out of a range like this, out of a range high, typically you're going to sweep the range low. And so you could have had a target below this range low down here, or you could have targeted, a full-blown retrace all the way back to this diagonal um, breakout that we had. And so there's a lot of things that you can consider whenever you're trading these. Keeping all the high time frame context in mind, and you're down on the 5 minute, you can keep that stuff in mind. And it just takes practice to get used to figuring out where to set your stop, and like when to add more, where to take profit at, so you're not taking profit too early. I actually don't mind taking profit too early. Like I said, I always like to do 1-to-1 risk to rewards, and so that just works out better for me. I like to keep my win rate high. And so once you've had this sell off right here, so even if you miss this, this is volatility. This is what you want to see, because there's going to be opportunity after something like this happens. And so don't panic if you miss the short. Don't worry about it. You can catch the long. And so you wait for the long signal, long signs, which we came down here, tested that really strong bullish reaction right there. You could hop in long there. Typically, I would rather wait for a pullback. You could get in long there and keep a stop. Somewhere to where you don't think it would get hit, somewhere far enough down this wick to where if it retraced that far down the wick, you're probably going to continue to grind lower. And that way you can still get a 1-to-1, because as far as this drop, you're going to get a decent bounce, so you can kind of base your take profit on where your stop loss placement is, so you get like a 1.5-to-1 risk to reward, something like that. I would have been less inclined to play that as I would this right here. So you get that strong bounce and you play this first retrace. So I would have been more inclined to wait for that and long, where you have more definition on where your stop loss placement should be in this case, because it's a internal retrace of a move up. And so in that case, you could get in between. You could get in at the 0.5 or get in at the 618. Get in between, however you want to do it. Get in all at the 0.5, ladder orders all the way through the 0.5 to 618, or get in most at the 618. I like to put some a little above the 0.5 and then ladder down to the 618. And that way, if it bounces and front runs the 0.5, at least I got a little bit filled. If it goes all the way to the 618, I normally get filled somewhere in between. Like my average price is somewhere in between. And then you can have your stop down below the 707 or 786. The 786 would be more conservative, so you don't get stopped out as often. And then target a move back to the pivot high or to the negative 236, which I've talked about before as high probability target, especially when the .5 to 618 holds. Any bots that are longing that, they're going to have take profits at the negative 236, so you could target there. Which for me in this case, I would have been more inclined just because I like to keep the risk to reward. I like to keep my win rate high, so I would have been targeting probably this pivot high or this low right here, which is kind of this range low. It's resistance now right in here. So I would have been more inclined to target either between this pivot high right here and that low. So I would have been targeting somewhere in that range right there, and that was still giving me a really good risk to reward compared to what I'm used to. I'm used to doing one-to-one risk to rewards a lot, and so in this case, 2-to-1 would be really good. So let's see. So far, we're rejecting again out of this supply up here. So it's giving us a rejection for the third time. We broke through, false breakout, rejected, got a wick through again, pretty much above that previous high, back into the supply region, and we've rejected again. And so if we continue to go down, I would be kind of looking for this as a support right here, because you could be looking at you would be looking at this pivot low up to this pivot high and coming down into, yeah, so the 0.5 would be right around the bottom here. And yeah, so we got support, so I'll change this back to green. We've got somewhat of a channel too. Faults broke above the top of that channel, and now we're coming down. So if this decides to break down right here, I'd be looking at a long, just going from this pivot low to that pivot high. The 0.5, it lines up with kind of the support region right here. So if we get some kind of move back down to here, I would be looking to long. I would be looking to long right there with a, let's see, be looking to long right there around the 0.5, stop below the 707, and target back up around these highs again. So that'd give us like almost a 2-to-1 if we get something like that. Get a small little bounce up right here and then roll over and come down into here. That would be a great longing opportunity pretty much anywhere all the way down. So if it decided to keep pushing down on a wick, I would ladder down, keep my stop below the 707, or even the 786 would still give me almost a 1.5-to-1, targeting back up around these highs. So that's one trade that I'll keep an eye on today. Cody, I can actually hear your mic on here. There were like 7 people in here just a minute ago. I don't know if something happened to my mic or like, can you guys see my screen? Most people probably are just going to watch the recording now that I've got the recording up. So I don't know if they left because they're going to watch the recording or if there's something wrong. Okay. Well, this is just going to be a recording today then, because I'm already 30 minutes in and I've talked about some pretty good stuff. So I'll upload this to YouTube.